What is going on, traders? In this video, I'm going to go over risk management and pretty much give you guys the basics of how I trade. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So this has been highly requested from someone in a Discord group, and I'm sorry I kept forgetting to make this video. So we're going to get it out the way. We're going to knock it out. It's pretty simple, I would say, at least for me. My trading style, I think, is very simple. First things first, I want you guys to understand that I am purely a swing trader. Do I day trade? Yes. Is it normally by accident? Yes. Usually I would day trade if I'll jump into a play in the morning, and maybe if I make enough profit off that play during the day, then I will close that trade. Now, if you're new to trading styles or you're new to trading in general, swing trading simply means that you hold a trade more than 24 hours. Day trading means that you open and close a trade within that same day. I don't scalp at all. It's just not for me. It doesn't work for me, and that's fine. Not every trading style works for everybody. Some people don't like swing trading. That's completely fine. I think swing trading is great for me and my trading style, and that's what I focus on. Another thing I want you guys to understand is I don't trade purely support and resistance. I trade supply and demand zones, which you will see me talk about in my YouTube channels or YouTube videos all the time. So just want to get that out the way. Now, first things first is that we are looking at coin, as in Coinbase. You guys should know what this is. And next thing we want to focus on is supply and demand zones or time. Well, we'll focus on time frames first. Okay. So a lot of problems that traders have is too many time frames. Okay, way too many time frames. I've seen traders go from the 5 minute to the hourly to the 30 minute to the 2 hour to the three. Like they use way too many time frames. I always recommend to use and focus on only three time frames. Now, me personally, I think the 5 minute time frame is terrible. I think the 1 minute time frame is terrible. I think those are absolutely terrible if you are looking to day trade or swing trade. If you're using it to scalp, then by all means, that makes perfect sense. But if you're using them to simply day trade and swing trade, I think those are horrible time frames to use. That's just my opinion. Do what works for you. Now, first things first is that I use the daily time frame to mark my supply and demand zones. I use the 4 hour time frame to mark trends and patterns, and I use the 2 hour time frame for an entry point. So we are looking at coin daily time frame here. And the indicator that I used to use, I don't use this anymore, but I think it's very, very beginner friendly. I use a more complicated indicator. I can't give you guys all the secret formula, okay? I just can't, all right? So it's called RSI based automatic supply and demand zone. This is one of the first supply and demand zone indicators I use. It is completely okay to use an indicator, guys. It makes your life easier. You're trying to do everything from scratch. You will miss out on a lot of plays, all right? So that is the indicator that I used to use, and currently this is how it looks, all right? It used to look different, but yeah, this is how it looks. So daily time frame, we're gonna mark our supply and demand zone here on coin, and all you're gonna do is just pretty much copy and paste what you see. So we mark it, boom. I'm not gonna mark this other supply and demand zone. I think that's just gonna be very cluttered. But what you can do is pretty much do this. Is just mark the bottom of the supply and demand zone since coin has broken below it, and boom, there you go. Okay, so why do I use supply and demand zones? Because I believe that's what institutions use. That's how institutions trade. And if you want to be a better trader, I always recommend to trade like the institutions, trade like the market makers, the people that pretty much make and help the market move more, way more than retail. If you think retail has a say in market movement, you are sadly mistaken. We have little to no say in market movement. The big guys move the market. We're just cheerleaders, hoping that whatever we're playing goes in that direction or in our direction. So again, we're looking at coin daily time frame, supply and demand zone. You mark it on your daily time frame. Next, you go down to your 4 hour time frame. You don't mark any supply and demand zones on your 4 hour time frame. All you're looking for, now, I'll take that back. If you don't find any supply and demand zones on your daily time frame, which is usually rare, but if you don't, then you can go down to your 4 hour time frame and start marking them. Okay. Next, as far as the 4 hour time frame, what I do is I look for patterns, trends, whatever the case may be. And so one of the first patterns that I notice as far as coin goes is that there is a head and shoulders pattern. Okay. And so we want to mark that. It can be a bear flag, it can be a bull flag, it can be whatever pattern you see. Okay. So in this case, we see a head and shoulders pattern. We have our shoulder here, shoulder here, and then we have our neckline we have our neckline, and I believe the neckline is about 228, around 228, 225 range. Okay, so boom, there's your neckline, and as you guys can see, we see what happens here. We zoom in on the 4 hour time frame. We broke our neckline, we retested our neckline, and then we broke further down. All right, so that is what I am looking for. So we have our pattern, we have our supply and demand zone. So now we're going to go back to the daily time frame and see just how far coin can go. And this is how I pretty much get my targets. It's a little bit more complex, but again, can't give you guys all the secret formula. I'm just giving you guys the basics of my strategy here. So here's another supply and demand zone. All right. So this is where my target would be. So right now we're looking at 188, 190. The lowest we're looking at is about 178, 175. Um, and then we go from there. Okay. So that would be my next target. So we go back to our 4 hour time frame. We have our pattern. So next thing we're going to look for is a trend, a very solid trend to confirm that coin is going to continue down or that it is going from bullish to bearish. Okay. So right here, we go back here and boom, we have our trend, guys. Boom. There you go. All right. So next, we want to make sure pretty much everything connects. You're not going to always perfect your trends, but you want to get them as close as possible. So we bounced here, 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 and then we broke here. Let's zoom in. We broke here and then we rejected this trend. So pretty spot on, okay? So you want your trends to be as spot on as possible. So as you guys can see, we broke this trend at around 222, 220 range. We retested it and now we are breaking further down. All right. So I told you guys in a few of my videos that we are in 209 puts for coin. Right now, coin is at 202 after hours or pre-market, as you would say. So after hours, pre-market, whatever you want to call it. And right now, we are in very much deep profit as far as coin go. We did add some contracts at around 217, 218 around this retest here, and then it broke further down. So we pretty much have our a solid setup here. We marked our daily supply and demand zone. So just a quick recap. You want to mark your daily supply and demand zones to the upside, and you want to find your daily supply and demand zone to the downside. Okay. Simple as that. All you need is to find two supply and demand zones that are one that is up to the upside and one that is to the downside. Simple as that. After that, you ignore your daily time frame unless you like see some huge major pattern that can change things, but otherwise you go down to your 4 hour time frame and all you're doing is looking for a trend break that can support your sentiment, whether it's bullish or bearish, which right now we are bearish, so we are looking for a trend break to the downside. We got our pattern here as well. We got our head and shoulders pattern, and then we have a trend break. Now, I want you to keep in mind that you're not always going to find a pattern, but you should always be looking for some type of trend break. Simple as that, whether it's to the upside or the downside. But you're not always going to find a head and shoulders pattern on every chart. You're not going to find a bull flag, bear flag, which is actually more common to find. But still, if you don't find patterns, that's completely fine as long as you look for that trend. If you don't find a trend break, then ignore it. All right. So next we go to our 2 hour time frame. And your 2 hour time frame is simple. You just look for your entry point. That's it. You don't do anything on the 2 hour time frame. All you're doing is looking for an entry point, and your entry point would be this break here. And then if you want, you can dollar cost average and add contracts, kind of like how we did in the Discord. You add contracts here, and then you break further down. Okay, and that's pretty much my strategy. That's the basics of my strategy. It's a little bit more complex, but again, can't give you the secret formula completely. All right, I just can't. That would defeat the point in me being a unique trader, or at least I feel like I'm a unique trader. And yeah, so that's it. So quick recap. All you're doing, you go to your daily time frame, you mark your supply and demand zones, you look for two supply and demand zones, one to the upside, one to the downside. That way you can get somewhat of a target where a stock or ETF, whatever you're trading, can potentially go. You go to your 4 hour time frame, you look for a pattern or a trend break, whether to the upside or to the downside, whatever pattern, rising wedge, bull flag, bear flag, head and shoulders. If you don't find a pattern, that is completely fine as long as you find a trend break. All right. Next, you want to see a 2 hour. You want to go to the 2 hour time frame to look for an entry point. You also want to make sure that your supply and demand zones are broken through. What I mean by that is that right here, you retested the supply and demand zone, you broke down. All right. Same if we were looking at the opposite side. Let me go to the 4 hour time frame. Same as if we were looking at the opposite side and we want to be bullish. If you want to be bullish, then you want to make sure that the daily supply and demand zone is broken to the upside. Simple as that. All right. So that's pretty much the strategy there, or the basics of it. It's like 50% of the strategy. But overall, you use this strategy, you would be much more successful, in my opinion, than you currently are. Okay. That's just my thoughts. Now, if you already are successful and you have a high win rate, by all means, stick to what you know. But this is pretty much my strategy. Now, as far as risk management go, so it all depends on what you're trying to do. Okay. So if you are trading off of smaller time frames here, so where would my I guess not smaller time frames. Let's get straight into the risk management real quick. So as far as management go, it's pretty simple. You're either gonna look for your stop loss to be above the trend that broke or above the pattern. Okay. So in this case, for example, my stop loss for coin will be around 230. Well, actually, it'll be around 222, 223. Okay. Because we entered at around 210, but then we added contracts at the retest of 217 to 18 range. Okay. So 223 would be my stop loss right here. So it's all about how you trade or what you're looking at. And this is why it's important to mark your charts and mark patterns on your charts and just mark these things. But right here will be, let's actually mark it out so you guys can see. Right here will be my stop loss. All right. Now, a lot of times I'm very confident in my plays, and we are in August 9th contract. So the time difference does make a huge amount of sense. Okay. So if you have a huge stop loss, and I don't consider this a huge stop loss because we added contracts at 218. So it is okay for you to be a week out. But what I will say is that if you have a huge stop loss, let's say up here, for example, off the daily supply and demand zone, and let's say you entered you entered down here at this break, okay? If you are going to enter at 250 on coin, you're going to enter puts here, all right? Your stop loss is going to be all the way at 270. All right. So stay with me here. 270, which means that you need a very dated contract, like a month or two out. Okay. If you're going to trade that huge of a stop loss. For example, we are in SPY puts. Let's look at SPY real quick. So a good example here is that we in a Discord are in SPY puts. We're in 510 SPY puts, but our date is all the way in September, September 30th, and our stop loss is 550 on the SPY. We entered at 531. So hopefully you guys are understanding what I'm saying here. It's really based off the time frame and where the daily supply and demand zone is. If the daily supply and demand zone is too far out, then you're going to focus on the trend or you're going to focus on the pattern. All right. You're going to use your stop losses based on the trend and the pattern. If the stop loss is far away, then you want to have a dated contract, a very out far dated contract, a month or two out. If the stop loss is small, or maybe you dollar cost average into the play that you're in at very close to resistance, then you can do a week or two out. All right, that's my strategy. That's how I go about it. Hopefully that makes sense. It's really dependent on a lot of things. It's also dependent on your account size. If you have a small account, then you might want to have very tight stop losses. All right, simple as that. You want to have tight stop losses. So, for example, here, if the SPY breaks below 542, which it did, by the way, if it breaks below 542 and you just so happen to take a trade on the SPY, let's go to the 2 hour time frame because that's how we enter, right? If the SPY breaks below 542 and you enter a trade at around, let's say, 540 break, then you want your stop loss to be a little bit above 542. I would say 545. So you can use psych levels as your stop loss as well. So 542, you enter at 542 break. You can say, okay, cool. The next psych level after 542 is 545. That's where I'm going to stop out at. All right. If you enter that 548 on the SPY for puts, then you can say, okay, my stop loss is going to be 550 because that is a major psych level. You can do things like that. So there's no really right or wrong answer on how you set your stop losses. It just has to make sense. Okay. I don't have the keys to stop losses or anything like that. I can only tell you what I do. And what I do is I use my stop losses based on one, my account size, two, where the supply and demand zone is, three, where the trend is, and four, what pattern am I trading off of. So there's a lot of things that come into play when you're picking your stop loss and your risk management. I think one of the major things you need to pay attention to as a trader is just how big your account is and how big of a loss your account can accept. All right. You should not be accepting a 70% loss or a 50% loss on a trade if you have a $1,000 account. All right. So that's really all I have. I'm sorry if you were expecting more or something like that. But the strategy is very simple. Managing your risk is really based on your account. It's based on your account. It's based on what you're looking at because everyone looks at charts very differently. And this is how I look at charts. Not too many people use supply and demand zones. I rarely see a lot of traders use it. I see a lot of traders focus on support and resistance, which is fine. That works for you. By all means, do that. Me, I use supply and demand zones, and it works for me. That's my bread and butter. I think and that's it. Okay. So until the next video, traders, hopefully you got something out of this. If not, if you want me to go into anything else, feel free to let me know. But that's all I have for this video. Until the next video, traders, have a good one.